Hey, what's going on, everybody? Today I want to talk about Vanguard and how you can open up a Roth IRA or any type of regular brokerage account with them. So Vanguard is a very popular brokerage out there today. They're known for their low fees and their overall just great performing low cost index funds. So let's go ahead and step through it. How you can open up a basic account with them here. I personally have my Roth IRA with them. But what you want to do is come to the personal investors page and then click open an account. And then you'll begin to start this process. And it says, how can we get you started? So a couple different options here. So let's just say we want to open a new account with money from our bank. And they have a short little video, really cool, walk you through how to do that. I'm just going to skip that for now. Click continue. I already have a login. I'm new to Vanguard. I'll click sign up. Fill out this information. You're going to have to know a couple different things. Your account type, personal information, log on information, and your bank. And then right here, you would come to, the different types of accounts you can open up. You can just open up a regular individual brokerage account, a joint account, a trust brokerage, education accounts, small business accounts, retirement accounts. So if you want to open up a Roth IRA, this is going to be money that you fund with after-tax money. But essentially, once you pay that tax on it, you'll never have to pay tax on it again with the current tax laws. So definitely a very powerful account. Just because even the market that we're in right now, we're in one of the lowest tax rates in our history of the United States. So, I'm going to leave that up to you where you think taxes are going to go in the future. But I'm betting that, over time, I think they're going to go upwards. But, they do have two accounts here. If you want to do pre-tax, you're going to lower your taxable income today. And then whenever you take it out, your earnings are going to be taxed. Like you're going to have to pay tax on all the earnings that you make in the account. So two different types of accounts, based upon your situation, you could do either one. I personally have both, just because, I recently rolled over my previous employer's 401k, and all of the match that I received for them goes into this bucket. The tax deferred bucket, the traditional IRA. So I rolled all of that over, and then all of my contribution to my Roth 401k, I just rolled it over into my Roth IRA. So definitely not a bad idea to have both these accounts. There's many influencers and financial advisors out there that they recommend having multiple different buckets for retirement, and those buckets are your tax deferred, so your pre-tax. Your after tax, so like your Roth accounts, and then your taxable brokerage accounts, those three different buckets. So tax deferred, after tax, and then your taxable accounts. So in this example, we're just going to open up a Roth IRA, click select that account, and then click continue. And then this is where you would start to fill out your personal information. But then once you do that, you'd click continue. And then the next steps would be to fund the account. And do remember, in order to, have a Roth IRA, there are some tax laws. Let me pull that up. I'm not a tax advisor, so I don't want to tell you incorrectly. But with a IRA, contributions are not tax deductible, but earnings can grow tax free. That's what we just talked about. If you fund it with after tax money, then it's gonna grow tax free, and whenever you withdraw it, it's gonna be tax free. Charles Schwab has a pretty good write up here. Let's go ahead and pull this over here so you guys can see it. Let me zoom in here. Move the screen over. Sorry, bear with me here. Alrighty. Okay, so this is according to Charles Schwab's website. Like I just mentioned, they're not tax deductible, whatever you put in, but the earnings can grow tax free. Great. Roth IRA withdrawal and payment rules vary. Yeah, so you can't withdraw your earnings before the age of 59 and a half. So that's important to keep in mind. If you put $1,000 in there and it turns into $10,000, you can take out your original $1,000, but that earnings or that growth, in order to take that out, you're going to get hit with a penalty. Looks like it's a 10% early withdrawal penalty, and you may have to pay taxes on the gains. I'm not sure about that. Withdrawals must be taken after a 5-year holding period. So I think the idea with that is if you open this account when you're 58, you can't open it, or you can't take out the withdrawals for 5 years. I'm gonna have to do some more research on that. I'll look that up and get some more clarification. Maybe throw it in the description down below. Yeah, so there's a couple of exceptions, such as a first-time home purchase. So that's nice to have liquidity for that. College expenses and birth or adoption expenses. You can withdraw your contributions at any time, tax and penalty free. Like I just talked about, if you put in $1,000, it grows to $10,000. You are obligated to be able to take out that $1,000 tax free. However, any of the earnings that go, you're gonna have to pay taxes, penalties on those earnings. So here's the question. If you take a distribution of Roth IRA before you reach 59 and a half and before the account is 5 years old, the earnings may be subjected to taxes and penalties. So that's key. So it does have to be 5 years old, and you have to be over the age of 59 and a half. So if you open an account at 60, from my understanding, you wouldn't be able to take out those earnings until 65, regardless you being over the age of 59 and a half. But definitely consult your tax advisor or financial advisor on those specific details, because that's kind of a iffy situation. So it looks like they do put a cap on the maximum that you can pull out for your first time home purchase of $10,000. So you can withdraw for education expenses, qualified expenses such as a birth or an adoption. You become disabled or pass away. That's interesting. So I wonder how that would happen. So like if you had $100,000 in there and you're 30 years old and you die, if your beneficiaries can like get access to that money, or if they just have to roll it over. From my understanding, they would just roll it over to your wife's Roth IRA. That is an option. I'm not sure about like the liquidation though, like if there was any fees or penalties if she just wants the cash like today. Unreimbursed medical expenses or health insurance if you're unemployed. Withdrawals from Roth IRA if you've had more than 5 years. Okay, so this is answering our question. Has been open for 5 or more years. Your earnings will not be subjected to taxes if you meet one of the following conditions. So it's a first-time home. Okay. You become disabled. Okay, so it sounds like the beneficiaries won't be subjected to the taxes there. So that's interesting. Interesting. So, yeah. So even if you're over the age of 59 and a half, your earnings will be subject to taxes, but not penalties. Cool thing about the Roth IRA, there's no RMDs required, minimum distributions. So, a lot of elderly people kind of get stuck into a situation where the government kind of forces them to pull money out of their retirement accounts. And I'll ultimately creates a tax bill for themselves. So no RMDs with Roth IRA. So that's pretty cool. For all ages, if you transfer your Roth IRA or traditional IRA and request that the check can be made payable to you, you have up to 60 days to deposit that check into another IRA without taxes or without taxes or penalties. This is known as a non-taxable rollover. And you can do this once within a 12-month period. Okay. So let's learn a little bit more about the contribution limits. They didn't really cover that in here. Okay, so they do include 2022 and 2023 because I think the limits just went up this year. Roth IRA contributions are made on an after-tax basis. Correct. That's kind of like what I talked about earlier. And there is an income level, so that is something to keep in mind. If you're a single person, your modified adjusted gross income must be under 144. So do keep that in mind for tax year. And it looks like it's getting bumped up to 153 for 2023. So that's pretty cool. If you're married and file jointly, your gross income cannot be more than 214 for 2022 and 228 for 2023. So nice little bump on those. The maximum you can contribute if you're under 50 in 2022 was $6,000. In 2023, it is now $6,500. So that's nice. And then the same jump applies for if you're older than 50. Oh, sweet. So let me see if I can fix this chart so you guys can see this a little bit better. There we go. So here's a little table they created, really cool, that you can see the contribution limits for this upcoming tax year. And I kind of just talked about it earlier. So it looks like this is the break-even part right here, where you can't make more than 151.5. Interesting. So it looks like you're still able to contribute some. This is interesting. You can do the max if obviously you're under 218, but you can see with each $1,000 increment, the max that you can contribute kind of goes down a little bit. Interesting. Okay. Pretty cool there. Nice little chart they made. I'll provide a link down in the description for this website as well. This is Charles Schwab, and this is 2022, so it's just kind of updated a little bit. This is a good question. So you can contribute for your spouse if she's unemployed, non-working, that you file jointly with, because essentially that means your income is one, but your total combined contribution cannot exceed either your joint taxable income or double the annual IRA limit. Okay, so that's good. And this should be no. Minors can contribute to an IRA based on the limits of their own, and there it is. That's the important part. In order to contribute, you have to have earned income. So you can't give your infant that's a year old $6,000 to invest into their Roth IRA. They actually have to earn that money themselves. And then, this is also important as well. A lot of people think that the contribution cutoff date is the end of the year, but really it's the tax date. So April 15th of 2023, you can contribute till you can contribute up until that date to your 2022 Roth IRA. Yeah, so pretty cool. It's good questions they have there. But yeah, there's many different brokers out there that are pretty good. Vanguard is one of my favorite. Fidelity is another good one. Looks like Charles Schwab's pretty solid too. I don't have any accounts there, so I can't really attest to their platform. But let's just look at Vanguard, and I'll briefly tell you kind of like my strategy for my IRA. So I'm not sure how these are sorted. Yeah, so let's look at total stock market ETFs. So VTI. So this is the ETF equivalent of like a VTSAX. See if I can. The index. I want to see. Yeah, where's this? So VTSAX is one that I'm currently invested in. So these are ETFs. Let's go straight to mutual funds. For some reason, VTS. Let's do a search for it then. VTSAX. So this is a popular one out there. It's a total stock market index fund, specifically focusing on companies in the United States. The minimum investment on Vanguard currently is $3,000. So if you don't have $3,000, like I mentioned, you can buy the ETF version of it, and that is VTI. So 10-year period, looks like it has done 12%. And then since inception in 2000, it's done 7.15%. So definitely not too bad. This is a total stock market index fund for the United States. Important thing to look at when you're investing into mutual funds and ETFs is that expense ratio. So 0.04 is very competitive. It's probably one of the lowest out there. I know Vanguard's been some of the lowest funds for a while. Other funds have definitely been trying to up their game and compete with them. Like I know Fidelity has some funds now that are like 0.00, like so they're essentially free funds. There's no fund management fee. And many others out there are pretty competitive with this 0.04. But if you come down here and see your expense ratio at like 1.04, I would definitely be concerned, and I would definitely reconsider that investment because the fees on that are a lot higher than this. So essentially 0.04, you're going to pay $4 per $10,000 invested. So very competitive there compared to if it was 1.04, you'd be paying $104. So definitely keep an eye out for that when you're investing into ETFs and mutual funds. Make sure that expense ratio is at a solid number there. So it was created in 1992, is designed to provide investors with exposure to the entire U.S. equity market, including small, mid, large cap, growth, and value stocks. The fund's key attributes are its low cost, broad diversification, and the potential for tax efficiency. Investors looking for a low-cost way to gain broad exposure to the U.S. stock market who are willing to accept the volatility that comes with the stock market. Investing may wish to consider this fund as either a core equity holding or your only domestic stock fund. So a lot of people that whenever they invest into their Roth IRA, they want a passive approach, and 100% VTSAX is a popular investment strategy out there. But definitely do your own research. Let's look at the portfolio composition here. It's 4,000 stocks in it, so good luck trying to recreate this fund yourself. You have to pick 4,000 stocks. The market cap median 123 billion. Yeah, has very little, not even a percent of foreign holdings. Looking at the sector weight, its biggest sector is tech, I believe. Technology at 24%. And then looks like healthcare is the second. Yeah, second biggest at healthcare, 14.3. And then consumer discretionary, then industrials, and then financials. Yeah. And then so and I imagine Apple, Microsoft, Amazon are going to be the top weighted ones there. Yep. And the cool thing about this is not really actively managed, so you're not going to be trying to, do as much stock picking. It's just buying the entire market and going from there. So the dividend is what's the dividend rate? Like I think it's around like 1.6. Yeah, 1.63 looks like the 30-day SEC yield. And it's going to vary because, stocks pay out on different months. But that's that. But yeah, okay. So that's pretty much the rundown of BTSAX. A lot of people, will buy 100% that, or if you want some international exposure, I think the other one is like VIAX. Let me think. VTIX. I'm also an investor in this one. Expense ratio is a little bit higher. I don't think the performance has been great on this one recently, but it's only done 4%. But that could just be, the past 10, 15, 20 years, that could easily turn around and, definitely outperform the U.S. going in the future, just with everything going on right now. So, wow. So that's a pretty big difference in fees. The average is 0.91, so you're going to pay $91 per $10,000 invested, whereas you're only going to pay $11 investing into Vanguard's equivalent of that. So that's what they're known for, the low-cost fees. And then lastly, I want to look at, I think it's VXIX, Vanguard's S&P 500 index fund. VFIX. So with this one as well, it's going to be a $3,000 minimum if you buy it through Vanguard. I know like some other brokerages, like I think Fidelity doesn't have that minimum, so that's a potential option as well. The ETF version of this should be VOO. Yeah, VOO. So you can see if you don't want to drop $3,000 to get started, you can buy this one for right around $365. But it's essentially the same thing, just an ETF version of it. But yeah, another great low-cost index fund here. Instead of targeting the entire U.S. stock market, it's only targeting the top 500 biggest. Offers exposure to 500 of the largest U.S. companies, which span many different industries and account for almost 3/4 of the U.S. stock market's value. Yeah, so the risk with this one is you're not getting any really mid-cap or small-cap stocks in your portfolio. But it's done pretty well over the 10 years. It's right at 12.52 and 6.85 since inception there. Their fees are once again very competitive. $4 compared to $78. But yeah, definitely go check that one out as well. As you can see, it's a blend of value and growth stocks in the large cap sector, or large cap, just market cap. A little bit higher weighted to technology. But yep, that is that. All right, guys. So that's pretty much the rundown of a couple different options you can invest into. There's some other ones too. Like if you want to just do a target date fund, I mean, that's probably the easiest. Let's just say 2050. This is very popular in 401ks, like target retirement funds. So if you're expecting to be close to 59 or 60 in 2050, then this might be a good fund for you to invest into. So your target date's between 2046 and 2050. So this is another way to invest if you don't want to put any thought into it. Target date funds are good because they are going to automatically reallocate your portfolio as you get closer to that retirement date. So they're going to take risk off the table. They're going to reduce your exposure to the equity market, get you into more of a bond style portfolio, just to preserve your capital whenever you might potentially be making withdrawals closer to that retirement date. So that's kind of the whole idea with target date funds. I personally I like to manage my portfolio a little bit more, so I don't want any exposure to bonds right now, just because I'm in my 20s and I prefer to have 100% equities, 100% stocks. But you can see here that this fund consists of 53% US based stocks, 37% international stocks, and then 6.7% US based bonds, and then 2.8% international bonds. So you're going to have close to 10% in bonds here. So for me, like I mentioned, I didn't really want exposure to bonds at my age. But that's just my strategy. This ultimately can be an easy one for you to implement if you prefer that. But just my preference there. I don't really care for bonds right now. I want the most growth possible, but I'm not a financial advisor, so do your own research with that. Understand what bonds versus stocks are, and you can make your own decision with your money. But yeah, another option, so many different brokers have these types of funds. Just look up a target date fund. So if you're with Fidelity has their own target date funds. Charles Schwab, TD Ameritrade. Actually, I don't think TD Ameritrade has funds, but there's tons of different target date funds out there. But once again, Vanguard is known for their low-cost fees. So let's see how they compare. So you're going to pay $8 versus the average of $44. So definitely a lot cheaper there. So Vanguard's, their funds are very good and very cheap as far as fees go. So do keep that in mind. If you haven't looked at your expense ratio in a while, definitely go check that out. Make sure it's competitive with other funds out there, because if not, you could just be paying, too much for your investment. So another thing to notice that this is only $1,000, so that could be something too that you could do. You could start out with $1,000, save up until you get at least $3,000, then sell this and roll it into, like VTSAX or the S&P 500 equivalent as well. But yeah, I think that's pretty much the rundown. This is how you can open up a retirement account, Roth IRA, traditional IRA, with Vanguard. Their platform is definitely not as exciting as some of the other ones, such as like Robinhood, Webull, and some of the newer brokers. But I think that's because their whole strategy is to buy low-cost index funds, not spend a whole lot of time of day trading or doing options or anything like that. So their platform is definitely not as user-friendly, but you can still trade options on their platform. I think it's $1. That's their fee. Let me look up that one last thing before we go. Okay, so I'm not finding anything. Let me see. So this just talks about how to trade options. Here we go. This should help us. Brokerage service and commissions. So no fees for Vanguard mutual funds, no fees for ETFs. So that's pretty cool. You can actually call it in and say, hey, buy $500 of the S&P 500, and they're not going to charge you any fee for that, it looks like. Cool. Now, if you want a broker assisted fee, it's going to be a $20 fee there. Options are going to be $0 to $1 if you have less than $1 million, and it's going to vary, $0 to $1 if you have over than $1 million. They're going to give you 25 free trades a year, it looks like, and 100 free trades if you have over 5 million. So pretty cool there. $1 not really competitive because a lot of them are either free or like 60 cents. So I guess that would be a downside. Different fees if you want to buy some CDs or bonds. And I forgot to mention this. There is an annual account service fee, but I don't currently pay this because clients who have an organization or a trust account, so not that. Clients who elected e-delivery of their statements. So, as long as you get e-statements, you're not going to have that $20 annual fee. So I definitely recommend that. Save yourself out on that annual account service fee. And once you get that $1 million mark, you don't have to worry about it either, because it looks like they're just going to waive that. So it looks like there is a wire transfer fee, but $10. It's waived if you have over $1 million. So that's pretty good. Okay, I'm going to wrap it up. Very long video, but this is just kind of a walkthrough of how to create a Roth IRA on Vanguard. I definitely recommend them if you're looking for a broker out there. But yeah, definitely do your research. There's other good ones out there as well. Like Fidelity is a good one. If you want to trade more options in your retirement account, Tastyworks is pretty good. And then Charles Schwab's probably a pretty good one as well. So yeah, just do your research. There's several different brokers out there. Do keep in mind, even if you're with Fidelity, you can still buy Vanguard funds. So you can still buy, VOO or VTSAX, or that is a nice feature that is available in today's markets as well. But yeah, that's pretty much it for this video. Definitely go check out Vanguard. I'll leave a couple of the links of the things we talked about today down below, and then go from there. But yeah, guys, thanks for watching. Please hit the like and subscribe button down below. Just want to throw a disclaimer out there. I'm not a financial advisor, so this is made for educational purposes only, just showing how anyone can quickly open up in a retirement account. But do keep in mind that you're going to want to do your own research as far as what funds, stocks to invest into. I personally prefer ETFs and mutual funds in my retirement accounts because, if you buy Tesla and it goes to zero and you lose $500, you're not going to get any tax incentive in your retirement account if it's an after tax, like a Roth IRA account. Versus if you had that in your individual brokerage account, you can write that loss off each year in taxes. So that's why people prefer typically, mutual funds and ETFs in their retirement accounts, just because, they have a higher chance of not going to zero because they're more diversified. But yeah, guys, that's it for the video today. Hope you enjoyed it. Thank you so much if you're still here. We're sitting hot, 30 minutes plus in this video. I just kind of want to go to a deep dive with this one. But all right, guys, take care. Thanks for watching.